Hey, it's Jay with AFN Access, and today I want to go over a simple question-based framework that you can use to qualify your clients for business funding. Now, if you're already a partner with AFN Access, you can use this framework word for word. And if you are not a part of our partner program yet, you're going to need to tweak just a couple lines in this framework to fit your current offerings. Let's go ahead and hop into it. I like to call this framework the qualifying questions. This is the same framework that we use here at AFN to train new reps that come in. We want to keep it as simple as possible. That way someone who's never done this before can just pick up this framework and qualify a client. So number one, how much are you looking for? This question is super important for obvious reasons. We need to know how much money the client wants. That way we can figure out, okay, can we fund this amount? And are they looking for something that's realistic? For anybody that's a partner with AFN Access, max amount in the United States is about $5 million. Max amount in Canada, funding amount is about $500,000, all right? So number two, what are you using the funds for? I feel like this question is a little overlooked in our business, but I feel like it's very important to ask because this is the actual problem that the money is solving, whether that be the business owner needs inventory, whether they need to make payroll, whether they're using the money to hire for a new position. This is where the emotion is. So the money that we provide is the solution for this problem. So what are you using the funds for? Gives us the problem that they need the money to solve. All right, so very important question to ask. Number three, how much are you averaging in revenue per month over the last 3 months? This question is very, very important because that is what the approval is going to be based off of. The financing that we provide, whether it be a term loan, whether it be short-term business financing, whether it be a line of credit, all of that stuff is going to be based off of the deposits or the revenue that's coming into that business bank account because there is no collateral here. A business owner doesn't have to put up their house. They don't have to put up their firstborn child to get this type of money. So those deposits are very, very important. And typically that approval is going to come back 1-to-1 on what their average revenue is over those 3 months. That's why we have that little blurb over there. Typically our approvals come back 1-to-1 to what your average revenue is. Could that work? All right. You want to this is your time to make sure your client is realistic. If you have someone that's doing $40,000 a month on average and they want a $2 million loan, that's not going to happen. All right. And it's your job to make sure your client is realistic in this regard. And we have an example here. If you're doing $10,000 a month, the approval will probably be somewhere in the ballpark of $10,000. If you want to add an extra zero to that, if they're doing about $100,000 a month, they'll get approved for about $100,000 a month. I would advise you not to inflate these numbers to bring in clients because they're going to be very upset with the first offer that they get because it's going to be about what they're doing on a monthly basis. It might be a little bit over or a little bit under, but it's going to be in that ballpark. Okay. Now you could get them approved for subsequent offers or you might be able to do 2 offers with a line of credit. I get that. But that first offer that they get is going to be in the ballpark of what they're doing on a monthly basis. So honesty is the best policy here. All right. Now revenue minimums for us is about $10,000 in the United States and $10,000 in Canada. For our partners that are sending in deals, just keep that in mind. All right. Number 4, do you have any current loans or advances on the business? All right. This is going to have a huge effect on what people are qualified for, so you have to ask it. If they say no, then great, you can skip the rest of these. If they say yes, you need to know with who, how much, and how long ago were you funded. With who is huge because different lenders accept different clients. And if you know who they got funded with, you can tell what type of deal it is. If it got funded by an A-paper, first position, good credit lender, you know this is probably a pretty good deal. If it got funded by bottom of the barrel, we love defaults, we want the trash lender, then you know that this client probably has some negative payment history that they're not telling you about. So that with who question is super, super important. How much is a very important question as well, because unless they're paying that position off, you're going to have to come behind that position. So that's going to greatly affect what you can get them. And then how long ago were you funded? If they were funded 6 months ago, it's going to be a lot easier to get that client funded than if they were funded yesterday. All right. And lenders are going to look at that and we're gonna look at that. So that's just something to be aware of. All right, number 5. This is more of just letting them know the type of offerings that we have, okay? This is the part where I said if you're not one of our partners, you're gonna need to tweak a little bit of this to fit what your current offerings are. So this is just to give you an idea of what we can do. Here's a little bit about us. We offer terms up to 24 months. Our payment structures usually come back on a weekly, bi-weekly, or monthly basis. Term and payment structure will depend on how your file scores with my pricing department. Now, that last part is very, very important because everybody wants a monthly payment, right? Everybody wants the best interest rate and everybody wants the longest term. But because this type of funding is non-collateralized, it really depends on their borrowing history, their credit score, and their financial history. Clients who want monthly payments are gonna have to qualify just like they would at a bank. We might be able to get them that offer and get those funds in their account a lot quicker than the bank, but they're still gonna have to have that great credit score and that great lending history. Now, those weekly and bi-weekly payment structures, they're gonna price out at the same cost as a monthly payment, but they're just broken up into smaller micro transactions to put an ease on cash flow. Number 6, how soon are you wanting the funds in your account? I love this question because our industry is built on speed. We can get funds in a client's account within hours, not days, not weeks, not months, hours. Okay, so you want to know when they want the money in their account, because if you're going to take 3 months to get them funded, they could have just went to the bank. Okay, so if a client tells you, hey, I need the money by the end of the day, you know you need to be moving at light speed to get this deal done, to get that offer for them, to get all of their documents in. So you want to use the timetable that they give you to get an application out and back in a timely fashion so you can get that approval for them, talk it over with them, and get that business funded, get the funds in their account when they need it so they can use our money to solve their problem. Okay, number 7, getting the app out. I want to read this blurb before we talk about it. All that is required to get started is a fully filled out e-application, which we provide to all of our partners, and 3 months of bank statements, 6 months if you're in Canada. Would you like me to email or text that application link to you? All right, our e-application is sent by a link. Each one of our partners gets their own customizable link and landing page that they can email or text to clients that walks them through the application. Now, wait to confirm that they got the link and ask if they have time to fill it out now, and stay on the phone with them if they do. That way, if they have any questions, you can answer them right there. You can guide them through any part that confuses them, and you can make sure you get it back in a timely fashion. Now, if they don't have time right now, ask them when they will have time and follow up with them if you don't receive the application in the time frame that they gave you. That last part is super, super important because we're dealing with business owners and they're very busy people, so they might not have time to do it right now. So I love setting an appointment with them of when they're gonna fill out the application and then following up with them if I get it and if I don't get it, okay? If I get it, I follow up with the, hey, application received. I'm gonna go ahead and get this into pricing for you. If I don't get it, I'll say, hey, I haven't got your application. I know you wanted the funds by the end of the day. If that's still true, we're gonna need to get that application here quickly so I can get it in front of pricing and get this offer out for you. So I hope this simple qualifying framework helps anybody who's just getting started in the business funding space ask the right questions to get their clients qualified. Now, as a gift to you guys, I will be putting a link to these questions in the description for free so you can download these and add them to your qualifying process. And if you want to partner up with AFN Access and join the largest business funding network in the United States and Canada, there's a link in the description for you as well. Hey, it's Jay from AFN Access. Like, comment, share, subscribe, and I'll see you on the next one.